And welcome to the NWR conference. My name is Elliot. I'm from AusBiz, and it's a pleasure to join you all today as we go through a few of the companies for the rest of the afternoon. Now, before I hand over to our next guest, I'm just going to run you through a little bit of information about the company. So the company is Family Zone, and Family Zone Cyber Safety aims to support and protect every child's digital journey. The company is an emerging leader in the fast-growing cybersecurity industry, and its patented cyber safety ecosystem has really helped to create a collaboration with all the facets, I guess, of the online adventures from schools, parents, and cybersecurity educators. It's got a growing presence in the very large US market, which makes up more than 80% of its customer base. But I won't tell you anymore. I'll leave that up to Managing Director Tim Levy, who will go through it. Reminder as well, we will have a Q&A section at the end. So as always, do just put in your questions in the Q&A box at the bottom of your screen. But otherwise, Tim.
Thanks, Elliot. Thank you for AusBiz, NWR, of course, and everyone for joining the session. I'll be doing a quick update on where we're at as a business. It's been an incredible 12 months for us with coronavirus and massive funding in our industry and huge sales success. So I'll briefly touch on that and then open up to questions. I know a lot of people on this call have probably heard this story many times, but I will provide a bit of background because I do think it's important for people to contextualize what we're trying to do, which is very, very unique. Let's get into it. Thanks, Elliot. So Family Zone's mission is to support and protect every child's digital journey. And this is a really important point for investors to understand. All of our competitors are really trying to solve let's call it duty of care challenges of a specific group of people. So, most of our industry is providing filtering for schools, or they're providing parental controls for parents. But it's where those things intersect that creates all the problems. So if all you're worried about is the school's duty of care, you lock down the kid's device, it's a school policy 24/7. But what does that mean for the parents when that kid goes home and the child is online on Instagram on their school device at 2 a.m. That's where the industry is breaking down, and we are literally the only provider in the world that's focusing on that child and that child's digital experience everywhere, supporting the needs of the child and supporting all those people that are in control of that child at any point in time during the day. We are literally still the only company that's pursuing that end, and you'll see that kind of play out in some of the slides I'll talk to you about now. Close to $200 million market cap. We're going for about 4.5 years, well funded with a funding round that we took up in the middle of last year. Yeah, approaching 2 million students on our platform, which is just over, I think, 3.3 or 3.4% of US school districts are now using our products, which is amazing given that we've only really been in the US properly for about 2 years. More than 3,000 schools on the platform and 10 million of recurring revenue. It was a lot higher than that, but there with the appreciation of the Australian dollar, that's come off. But on a nominal basis, we're doing incredibly well in all of our markets, growing in all of our markets. So pretty much a US focused business now, albeit where, as you'll see in this presentation, we're starting to open up some new markets as well. So these are our range of products. School Manager is our Trojan horse. It's the appliance-based network filtering tool, I guess you'd say, that you can plug into a school's network, and it enforces schools' legal obligations to keep kids safe. And we're investing strongly in that product with decryption technology and behavioral alerts and alarming. We literally save kids' lives every single week. We celebrate the fact that we've intervened in some serious, really serious incidents, literally every week across all the markets in which we operate. That's the core of our product. And then once you've got our network appliance, we can then offer our cloud services, which is where we push applications onto kids' learning devices. And then that empowers teachers to deal with all the kind of various challenges of teaching in the modern learning environment. You've got a wall of the back of laptops in your classroom, or with coronavirus, you've got 30 kids in your class that are sitting at home and you need to teach them and keep them safe. You can see the ClassWise product there. You can see the screens on kids' classes, and we're soon, I think this week actually, we're launching a peer-to-peer streaming, so real-time streaming of kids' classes and rich messaging between teachers and parents and kids. So continually climbing up the food chain in our core school products. We've recently announced that we've completed the migration of our education platform from Amazon services into Google Cloud Platform, and that's making available a whole range of really exciting data services. These data services provide executive dashboards, executive information, pastoral care reports. They support cyber safety and well-being. And some of our competitors who specialize and only sell services in those what's called cyber safety or well-being products, they're selling through getting three times per student what we do in our core compliance offerings. So that's why we're investing in that part of the market, and we'll have a lot more to say this half about some new products that we're launching. And some of those products, by the way, will be the first to launch products on Google platforms. It's very exciting. Community is the way that we then start selling through those schools into parents. And communities starts with a website, a school-branded website where parents can find out everything they need to know about bullying or sexting or Omegle or TikTok or Facebook or what have you. It's the way that the schools can support their increasing obligations to support parents with parental controls and what's called digital citizenship. That product is doing incredibly well. I think we've got now 560 school clients across, so 560 clients across our all of our markets, which accounts for something like 60% of our schools globally now have a family zone provided school branded content hub. Family Zone Insights is then our free version of our parental control tools, which schools make available to their parents. And then from that Insights product, that parents can upgrade. So the difference between Insights and Premium is Insights, parents can see what the kids are doing, see that the kids accessing a gambling site or on Instagram at 2 a.m. And with the Premium product is when they can lock that down. So, well, no, I've got to get my kid to sleep by 7 p.m. or they can't go to that gambling site or they can't use TikTok or Tinder or something. So that's our full range of products. And as you can see, what they provide is a full a solution for all the people who are the guardians, I guess, of the parent of the child at any one time, from the parents to the teachers to the school admins to boarding schools, you name it. We have a solution to deal with all of those dynamics. So these numbers go through where we got to at the end of last year, end of last calendar year. December isn't a particularly strong sales period in our core market, the US, albeit it is a pretty strong market in Australia and New Zealand. We grew strongly in all those markets. One of the most impressive things is the kind of acceleration in our growth curve. You see that in this chart on the left. We count the number of days it takes to add 500,000 students to a platform. As you see, the first 500,000 took 1,000 days, and the most recent 500,000 took 130 days. So incredible growth. You won't see that this quarter. The March quarter is the slow quarter in US sales, albeit it's a massive build up into that June quarter, which is where all the budgets are set. And I can tell you that our POC trials, our products are sold through trials, literal spinning up instances and trialing our products, and our POC trials are essentially at the highest they've ever been in our business. So we're really geared up for a massive half. Student license you see on the charts on the right, they just show the strong growth in our business over the last couple of years. And those little sections in grey, that's the POCs. They're the people who are trialing our technology, principally in the US. And you can see it fell off in the December quarter as we're kind of moving into that slow sales point. But as I said, the POC trials are now taking off. And that's buoyed not only by the sales cycle, but by literally billions and billions of dollars of funding that's come through CARES Act, through coronavirus funding, and through the Biden administration, and who are very supportive of education funding in the US. So expect big growth, big news out of the US, certainly for the next couple of years in our business. And with those increasing sales and increasing student licenses, we're seeing massive growth in our revenue. We remarkably had in the December quarter, the biggest total value of contracts we've ever sold in what's usually a slow period. And that reflects a couple of things: improving yield, so improving per student fees with the new services that we're adding, longer contract lengths because our business is getting better known in the US. And so we're getting the confidence of these big institutions to sign long-term deals. And you can see in this chart on the bottom left that the growth, these charts are put on half basis. You can see the phenomenal growth, really kind of back-ended. Most of our growth, certainly from a cash flow perspective, is in the back half of the calendar years. But you can see very clearly there the acceleration in our business. And then on the bottom right, it's also important to see that that's now translating to real cash flow. So in that last half, we collected nearly $7.5 million from customers, which is a tremendous result. So again, showing that all this investment and all this sales effort and product development is translating now to substantial growth in cash flows. Yeah, again, just worth highlighting, we're getting close to 3.5% of US school districts. Our ambition is to get to 10% of school districts in the medium term, so we'll call that 2.5 to 3 years. And I think we're looking pretty strong. And you can see also in these pie charts that we're very much transitioning to become a US-centric business. 46%, 48%, sorry, of our business in 2019 was out of the US. It's now closer to 85%. So very much US-centric business now. So I'm motoring through, but what I'd like to do is kind of backtrack a little bit and talk to the funding round that we did in the middle of last year. That was done following incredibly successful June quarter and then July sales results. And what we said to the market at that time is, we've proven that we can execute. We've proven that this prospect that we've been talking about, the exciting US opportunity, we've proven that we can turn that into happy customers and cash flow. So we proved that, and then went to the market, and the market, we're fortunate enough that the market backed us to do this next phase. And what you're seeing on this slide is that next phase. So our strategy is on the right-hand side. So our objectives are to grow our schools base in existing and new markets, leverage our schools to transition into the parent community, what we call the B2B2C transition, layer services in our existing product lines to make our products higher yielding, get more revenue per student, but also make our business more sticky, invest in our platforms and organizations for scale, and then obviously consider strategic acquisitions to add complementary technology or new distribution and mass this business up. That's always been a long-term objective of ours. So let's kind of run through. That was my promise to investors who backed us in the middle of last year, and let's mark us to that. Education expansion plans, clearly on track, as you've seen from those previous charts. Very strong growth. We hit targets in all of our markets last quarter and exceeded our budgets remarkably. In fact, beat our all-time records in total contracts sold. US pipeline is building really strongly for this half, which is sensational. And we expect to launch in at least one new market in this half as well. We've been looking at Canada and the UK for a while, and we expect to be in one of those in the coming months. And so those selling into those schools obviously then gives us access to layering new services and selling to parents. Product expansion is on track. We'll be launching through our US school districts into parents next quarter, so it should be next month, and that's looking really good. We're fortunate in that with this investment, we've been able to significantly expand our engineering team. I think our engineering team's gone from something like 40 full-time developers in the middle of last year, and it's probably closer to 80 now, which gives us so much more capability to walk and chew gum, frankly, at the same time. We can actually not only deliver products for the education part of our business, but we can sell through to parents, which is, we've probably been underinvesting in truth in the last couple of years, but now that's changing. I also mentioned previously in this session that there's a number of other enterprise type products for the schools, which will be launching this half, which are really mind-blowing, actually, what we'll be launching. So I'll leave that to another day, but some very exciting stuff that give us the ability to sell much higher rates per student into this market. And as I said before, some of our competitors sell 3 times what we do in specialized products. So there is definitely a best practices type model that you can operate in our market. Improving operating leverage. This is fundamentally the biggest issue in a business like SaaS business, is making sure that you have high margins. Fixed costs are important, of course, but the fixed costs are less relevant than the operating leverage. And that's really been a big part of our focus in the last year, is transitioning from Amazon to Google. We've been running Amazon, Google data and hosting in parallel for a good 6 months in our business, dealing with the massive growth. And in February, We transitioned all of our education stack into Google, and that saved instantly about $2 million of costs stripped straight out of our business. And I think as of now, that's closer to $3 million of costs have been ripped out of our business through this transition. So incredibly important. And that's if you're an investor in tune with our business, that's where you should be focusing your attention. That's what really gives us scale. And then what I've been spending most of my time in truth on in the last 4 to 5 months is the kind of operational capability, the organizational capability, hiring people like CFOs and heads of HR, implementing ERP systems, putting in place engineering managers to make sure that our senior team in this business aren't in the weeds so much that we can be more strategic and more responsive. We've gone from 84 staff, I think it was in the middle of the year, to now north of 150 staff. And doing that without proper structures is a recipe for disaster. So that's really what I've been focusing my time on, is making sure that these 150 people are super performant and super effective. And I feel really, really comfortable. I'm really happy with where we've got to. And then with strategic acquisitions, that's now, as I'm transitioning from kind of a head down focus and moving to head up focus, that'll be a lot more of what I do in coming months. Let's quickly talk about markets and opportunities. Obviously, US is the most important market for us, and it will be for a long time to come, I think, if not forever. And part of it is just the sheer scale. Part of it is the structure of the US is really accommodating for what we do. You get to sell to school districts. School districts are sophisticated buyers. They have the ability to deploy our sorts of technology brilliantly. They have access to enterprise device management tools, which means they can deploy our technology onto students' devices. And it means that students can't remove that technology, which provides a great experience for parents. It's truly the best market to deploy our sorts of services. And then add to that the US government has funded that sector effectively infinitely. Is whatever money that US school districts want to help address coronavirus, be it getting Chromebooks, filtering technology, or support mental health programs for kids or teachers coming back to school. Whatever that you want in the US, you have that funding. One of the challenges we have is that there's a worldwide shortage of Chromebooks, which is the kind of go-to device strategy in US school districts. So that's kind of delaying take-up, but our market is super buoyant. Everybody in filtering in the US is winning, and we're outperforming. So it's a super important market, massive tailwinds. But there are other very attractive market opportunities. Obviously, Canada, most of the competitors who sell filtering into the US sell into Canada as well. So it's a natural transition, and that's not exactly the same funding models, but it's quite similarly organised. And obviously the UK, English speaking, it's a sophisticated market. They have big buying groups as well. That's of real interest to us, as also a springboard into Western Europe. And now we, like all of our competitors in the industry, are trying to climb up the food chain, offering new products, to layer new products, to move out of just selling to the IT guy in school districts, and then support well-being and learning and executive information. That's really the future of our business, and that's what will keep our yields high, and keep us competitive, and keep us sticky, as well as selling it to parents. So that's a bit of an update. So again, went to the market in the middle of last year saying, I'll go back to it, saying we'll do these things on the right-hand side. I'm probably a third through that strategy, and honestly feeling incredibly comfortable that we're on track. So, things move up and down, of course, in cycles in businesses like ours, but this is a medium-term strategy. What we were seeking funding for essentially for 2 to 3 years to hit these targets, and I'm feeling really, really positive about it. So look, just before I wrap up, I think everybody's familiar with the executive team. That's a great team. We're doing really well. We'll be having a CFO added to the circle on the bottom right there very shortly. And one thing that's been really pleasing for me is the increasing institutionalization of our register. We're getting close to 30% of our register is now held by institutional investors, and they're proving to be very sticky. We've got some really big investors, big backers of ours, big backers of mine. I'm really grateful for their support and their counsel. And so I feel like we're on the cusp as some of these organic growth opportunities and hopefully product launches and hopefully some corporate work start to materialize in the next few months. I'm looking for another re-rating opportunity. So I'm feeling pretty excited about the next 3 or 4 months. And that's it. That's my presentation, right on 20 minutes. So back to Elliot and Q&A.
Wonderful. Thank you so much, Tim, for taking us through it all. If you do still have any questions, please do submit them. We're still going to have a bit of a Q&A session. First up, Tim, allowing for the fact that many US schools would still be with their current supplier contracts, what percentage of schools is a realistic goal for your sales team by maybe the end of the year?
Oh, we're straight into forecast mode. Oh, that's a tough one to answer. I mean, I'll talk to our ambition. It's, as I often say, it's this. We talk internally all the time about 10%, 10%. We want to get 10% of US school districts in the medium term. That's kind of around about 2.5 years now from our original plans, middle of last year. I feel well placed for that. If we hit that, that's 5 to 6 million students at something like, let's call it, $6. Let's even call it $5 per student per year. That's a $25-30 million recurring revenue business. That's a behemoth. And then our objective is to get 10% of the parents in those schools using our parental control products. I mean, that's, we're a monster if we can achieve that. And I think we're a really good shot. Yes, it's true that all of our, everybody we sell to has an incumbent provider. There's no greenfields in the US effectively, because there is a requirement under law to use services like what we do. And so our job is to prove the efficacy, or I guess to prove the value to the purchaser in that situation, to say that, well, the cost of transition is outweighed by the value that we can create. And the value we create is from a whole range of things. For instance, we're a one-stop shop vendor, really the only one-stop shop vendor now that there is in the US that provides appliance-based filtering, cloud-based filtering, and all the kind of pastoral care and wellbeing tools. And we are the only one that has this kind of child-centric approach that supports parents, all the community stuff we talk about. So the value equation is really strong, and we're still converting, close to 40, in fact, probably over 40% of our qualified leads that come into our business get converted into an ultimate sale. And those customers that trial our products, it's close to 90%, anywhere between 80 and 90% of people that touch our products say, yes, I'll buy it. So we're really effective and getting increasingly more effective as our product improves and their reputation improves in the state.
Well, thanks, Tim. Let's turn now to, I guess, the financials of it all. I'm interested to sort of understand your cost structure, and when we do consider the path to profitability. Can you tell us about the costs of providing the product and how you're going to be able to scale that with volume?
Yeah, look, so we've got fixed costs. It's moved a fair bit in recent times. As of mid last year, I think our fixed costs were about 11 or 12. Our fixed costs are north of 15 now. But don't quote me, I haven't got the specific numbers here, but just generally we've got an increased fixed base, and that was really done because we promised to do that to investors, that would expand our capability. The real focus here is operating leverage. We want to maintain an average revenue per student of $7 Australian per year, and we want to have a operating margin of around about $5 per student per year. So that's the game. It's much like a telco. Maintain your margins, you can improve your margins over time, and cover the fixed costs. So look, it's very easy to work out how many students we need. If we're making $5 per student, we've got 2 million students, there's 10 million of margin. If we've got 3 million students, it's 15 million margin. If we hit 10% of schools in the US, we've got 6 million students, it's $20 to $30 million of margin, right? So it's super profitable from that stage. So it's pretty easy to do the numbers yourself. I don't really want to get into the kind of intricacies of our cost structure. We'll get more into that when I release our next 4C, which will be where we've now absorbed all the new investments that we've made. So I'll talk more to this in the 4C report that comes out at the end of April.
Thank you. Now, when looking at your competitors, how do you compare to them, and what has sort of been a way that you have stuck out when going in tenders?
Well, look, as I was saying before, we've got a very deliberate strategy that's different to our competitors. really two ways. One is we want to have the broadest suite of tools for educators, for schools. And I should explain that most of our competitors have a let's call it a narrow focus on a particular segment or a particular feature set, because let's face it, the education market isn't a highly profitable market for any technology provider. There's more lucrative markets in enterprise technologies. So our competitors will focus on appliance filtering, or they'll focus on classroom control or cyber safety alerts or something. We do it all. We do it all because our objective is different. It's not necessarily extracting the most value out of each potential student. It's about having access to as many potential parent customers as possible. And that's, yes, it's commercial opportunity, but it's also because we feel like supporting the entire school community gives us the best chance of actually making an impact in this in cyber safety. So that's number one. Our core point of difference is our sales guys can go to the decision maker, which is usually the IT guy in school districts in the US, and run through an inventory of the problems that they've got with systems that have holes in it, that are backed up by other third systems that they have to plug in. And we go through, yes, we can solve that, we can solve that, we can solve that, we can solve that. So that's the first thing we do that's unique. And then it's then adding that community element with consulting support, content support, and ultimately parental control tools that none of our competitors can match. So it's really kind of two themes of difference.
And when looking towards the future, do you have any other products in your pipeline or in your arsenal that you will be looking to bring out, or would you be looking maybe even at some acquisitions down the line?
Yes and yes. With this investment, we've built a number of capabilities. Firstly, I've got a dedicated team to school manager product, our class-wise product, and we've now built a data engineering team. So we can now actually innovate across the whole suite of our tools constantly. We released a product, it doesn't sound like much, but we released a product called Closed Tabs, would you believe, a few weeks ago, and it was the fastest and highest taken up product that we've ever released. It was remarkable. In last year, that would have been a prioritization decision for me between Closed Tab feature or launching consumer in the States. We don't have to make those prioritization compromises anymore. We can do it all. Most of the emphasis in our product development right now, apart from these kind of small features in our core products, is around data analytics, alerting, wellbeing, keeping kids safe at school, I guess. School districts will pay real money for that stuff. Think about the news around active shooters. Like it's a big area of interest in schools in the US. And then selling through those, providing products through those schools to parents. And what we've learned from selling through schools to parents in Australia and New Zealand the last couple of years really stands out. Like it gives us such an opportunity to be more effective than anyone else in the parental control space. There is a lot of nuance in how you do this and how you do it well. We're achieving something like 50% of parents in our Australian schools using our products. No one in the market can match that, and we've done that not through just product, but also through smart marketing, great engagement. So that's where the innovation, you'll see that innovation coming out in the next 3 to 6 months.
Wonderful. Well, Tim, thank you so much for taking the time to run us through it all, for answering the questions in regards to Family Zone. That's all we do have time for, but really do appreciate your time today.
Thanks, mate. Good to see you.